So a lot of people want to know about hedge funds, the reality of a hedge fund, what they do, who works in it, how many people, desks, what time do they start, what time do they finish, do they have like some secret trading strategy, do they make money every day, do they lose money? I think people are interested. So I worked in a very big, I think they had, it's either 2 or 5 billion, and they were a household name. They still are a household name. And I think I worked there 5 years on the risk side. I was not a portfolio manager. The portfolio managers at this fund were all industry veterans. So at the time I was in my 20s, all the portfolio managers were 40s, 50s. I don't think there were any 60-year-olds. No, there was a 60-year-old actually. And I'll take you through the setup. So the office I was in Berkeley Square, Mayfair, London, and we were in that area of London are a lot of hedge funds. So they generally rent a floor or 2 floors, and they set up. So for this hedge fund, they had this big office, wooden desks. Most were empty. So it was interesting. You go in, empty banker desks, then one person on a bank, then another space, then another person. So the office was, they had a head of legal. They had like a guy, I don't actually know what he did. He wasn't legal, he was kind of HR, I suppose. I think he just kind of made sure everything worked. He had no specific title. And I don't even know what the legal guy did. They kind of rolled in and rolled out, these 2 guys, right? Then you had the portfolio managers. So one was called Russell. I won't give you surnames, but I'll give you first names. Russell. And what his setup was, I don't know where he'd come from or his previous experience, but he had a long-short equity portfolio. So I think he had around 500 million. And he had maybe 16 to 20 stocks. Some were long, some were shorts. And he spent his day analysing stocks. And he would trade not very frequently, maybe a couple of trades a day, adjusting positions, adding a new stock, taking away a stock. And I couldn't see any particular edge in what he was doing. He kept a job, but never felt like he was blowing it out of the park. Okay, then there was a guy called Mark, absolutely massive South African, big deep laugh, one of those types. And he was a veteran. I know he'd previously worked at Goldman Sachs, and he was a macro trader. So he would get on themes, like economic themes, and his style was once he got on the right side of something, he didn't just have like his bet size would be, I don't know, 500 million in a currency position, and he wouldn't take money off, he would double up. So once it started going in his direction, he would put more and more and more behind this trade. And that was an eye-opening strategy for me, because I'd come from a world where people lightened their position, whereas he made it bigger. And he was a great trader. He would also, during the day, I guess you'd call it scalp. When the news would come out, he would smack either a foreign exchange or just the SPOOs. And he would just smack a whole bunch of contracts in the SPOOs just for a few minutes, riding the wave, and then would close it. And he did that maybe once or twice a day. He'd just smack the SPOOs and take out a few points. So each day he'd try and have that positive P&L. I think it's important for traders they always want to be green on the day. You want to try and be green. So for him and others in the office, they wouldn't go for much. They would hit the SPOOs, or another guy was always trading it's a credit default swap product, the iTrax, and he would just smack the iTrax, take out 2 points, that would be a profit of like 50 to 100 grand, and then that would be him green on the day. So anyway, this Mark guy, he had core positions that he would be holding out for themes to play out, and he would double up, triple up when they started to go his way, and then in the meantime he would smack big intraday trades on. That was an interesting one. There was another guy called Andrew. He was completely retarded mentally, in that I don't know, either autistic or psychotic, or he had some major malfunction. But he was also I think he was a good trader, because similar to Mark, he was good at sitting on his hands. He wouldn't bother with the intraday stuff. He would just take on massive positions, and when they went his way, he would double down on them. And he might go 8 months without a trade. I could never have traded that way, but he managed to literally do nothing. I don't know, maybe he was decking out his house or something, and then when he got a theme, he just went for it. So that was an interesting take. I don't know how easy it is to do that style. I find difficult to wait and then double down and then triple down, because you're not giving yourself that many occurrences. I do like their intraday method of when they see a bit of momentum in a direction, they whack a few contracts in the spoos or in a for them they often did forex pairs, and just took out a few points just to be green on the day. Okay, there was an FX trader called Malcolm. He did nothing. I don't know what he did all day. He had I traded more than him, and I wasn't even a trader. Not for the firm anyway. He was meant to be doing forex, especially in emerging market forex, and he just had no conviction. And I really don't know how he had a job, because he was terrible. He had these lines all over his chart, and just nonsense technical stuff, and that was his way of trying to get in a position. So he wasn't very impressive. There was then a whole load of credit traders down the far end of the office, and this was like a little group. And one guy called Mike, who I liked. He was a normal human, because most of these guys aren't. He would do the same thing. Once he saw a bit of momentum intraday, he'd often do like 2 trades a day, where he'd just take 1 or 2 points out of the eye tracks, and just to keep himself green on the day. And it's amazing, if you just chip away with a couple of green trades, he'd then just sit there the rest of the day chatting, I don't know, keeping up with friends, whatever. And he wouldn't even, every now and again they built up these big portfolios of credit default swaps against various companies, and they'd run this big portfolio. But more often than not, they really had not that many positions, and the bulk of their income seemed to come from these short intraday trades when they got a bit of momentum behind the market. There were other traders there, again, not memorable. But apart from that, the office was pretty empty. The New York office that we would work with, they had one really, probably the best trader of them all, a guy called Jeff. And each day he would really chuck in a return. And I couldn't see, because I only ever saw his numbers. But he was very active, and I pretty much think he was probably the best there. I don't know if he had a portfolio, or if he was intraday, or if he was a mixture of the lot. But when you think of a hedge fund, don't think that there's anything special going on. At least in this one, is just a few old dudes sat at a desk, literally having a punt. There was no big computer models running. There was nothing special going on. They had they may have had the chart at the price. They've got no technicals going on. They've got no lines, no moving averages, no VWAP, no Bollingers, literally blank price. And you're lucky if it's even on a chart. Most of the time they're looking at just a list of the bid and ask. So for example, I don't use charts to trade. Neither. I think they looked at them from time to time, charts, just to see kind of where we were relative. But all these YouTubers that have a million lines and all these indicators, in the real world, they don't exist. So that is what it's like to work in a hedge fund. We started in the morning. I think I had to be in it around between 7 and 8, and then my job was making sure that what the trades they thought they put on, they had, and then doing their risk analysis. So when it becomes, sometimes they ran option books, just making sure it was in the systems as it should be. I don't know, you wouldn't call me a quant, but basically risk managing for them, because all these guys, they probably didn't even wipe their own So, they had someone to do everything for them. We knocked off around 7 maybe, so around a 12-hour day would be pretty normal. And then we'd hand over to the US team in the late afternoon, and then the US team would hand over to the Asian team at the end of their day. We also, right in the center, was a execution desk. Now, the idea behind them, again, they didn't have to do a lot. They would sometimes execute a equity trade. So they would try and just slowly buy into a position if for a portfolio manager. They also, let's say the Andrew guy went out for whatever reason, he would leave what they referred to as a call sheet. So if a certain commodity or stock or whatever got to a certain price, she would have to, her name was Christina. She's strange. She used to bath with her dog. Anyway, she would have to call him and say dollar yen's at 123 or whatever, and then he would do something or say thanks very much and hang up. So that call desk had to then hand over to all the other call desks. So in the night, as a portfolio manager, if the underlying hit that level, you get a call. I don't think they called that much, but anyway, that's what the function of that was. It's a pretty gruesome place to work. These guys they're not making friends. There was on more than one occasion when guys tried to get back in. So part of me and my desk was kind of servicing these guys, and there was, I don't know, 3 of us. When they didn't want you, the bathrooms were outside the kind of glass doors, and basically when you came to re-enter the office, if you were done, your pass wouldn't work, and that legal guy would be at the door and he'd just say, we'll send your stuff to you. So pretty gruesome. And I remember a guy, I think he'd been out, he fell asleep in the cubicle and snored, and when he came to re-enter the office, his pass didn't work. Fair enough, that one was fair enough, but they did it to other people as well, that kind of, they could have just said you're fired. So yeah, it's pretty gruesome. Malcolm got fired, that FX trader, when I was there. They just said you're done, and that was that. You don't work notice at these places. They just say, here's some money, there's the door, if you're not already on the other side of the door, and see you later. And then you sign like NDAs, and you give away all rights basically when you accept their kind of redundancy offer. You've got to remember, these firms with like a few billion, all they are is asset gatherers. They make 2% on that 2 billion, and that pays them. So in terms of the trading, they really don't have to do much. The worst thing they can do is lose. So as long as they are slightly green, they can almost live another year. So it's like all these asset gatherers, they're not incentivized to perform. They don't have to swing the bat each day. They really tread on the side of caution. So don't think for a minute that they're doing anything special. And you can see it in the results. When you look up hedge fund performance, they're always mediocre, like 5%, 6%, always very average. You get the odd outlier. But this firm, I think they've had their outlying performance some way back, but now they're really just asset gatherers. And when you make 2% on a few billion and you pay yourself so much money, it burns your eyes. Why risk it? So I guess the summary is, don't wish that you worked at one. Don't think that they're doing anything special, because they're not. And that's about it.